The broadcast is now starting. All attendees are in listen-only mode.
Again. All right, how we doing, everybody? Get the screen going here. Give me a minute. I had some trouble logging in. I'm in Florida. The weather's bad every day. All right, let's see. All right, just getting the panels up so I could see you guys. All right, let's do this. Okay, can everybody hear me clearly and see my screen? Just give me a quick Y. Saray, how you doing? Stacy, what's up? Tonight was for you. Okay, everybody's good. All right, let's do this. All right, typical 4.41 CFTC rule. Read it. It's up there. Don't use money you cannot afford to lose. Instead, use someone else's money, and that's what we're going to talk about tonight. Welcome, my new and returning students. I don't know if my new guy's in here. Let me see where you're at. My military buddy. I don't see him. All right. I am absolutely behind on emails. So give me a chance. I'll get caught up, I promise. Only write to Steve at beatthemarketmaker.com. Support is for all other issues. Info, do not write. Okay, info is for people inquiring about being part of the group. Congrats to Stacy. There she is. She passed her stage 1 of her FTMO challenge for 200 grand. Proud of you, man. Really. So we'll talk more about that. Anyway, everyone's clapping for you. All right. So we know we started the new quarter July 1st, right? It's the next 12-week cycle, beginning in the third quarter. We're halfway through the year, man. And you know this last piece flies. Once summer's over, we're into Halloween, Thanksgiving, Christmas, and that's a wrap. And I've been crossing this calendar off for you guys for years, and it just seems like it goes faster and faster. It's probably just me because I'm getting old. But here's the deal. You new guys have been around, sitting on your hands, you got to have a plan in place or being in development right now, working towards that. That's the only way you're going to find it in this business, man. I want to talk about some of those things tonight, some considerations that we need to address, and I'm going to talk about, I mentioned this, I was going to do this, about building a salary and how you should be able to transition from your job to trading. I did it from the fire department, and I have some insights on how it's supposed to go. We'll talk about that stuff tonight. All right, so here's my calendar. You guys know the drill. All right, we got 3 months, 31 days. This is unusual because we got like 13 weeks in here. So we're on the 14th. Let me grab a pen. All right, so we're on the 14th. But the cool thing is that this was week 1. But if you start here, 1, 2, 3, right? 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. So you actually have a week to screw around. This is 12 weeks. This is 13 weeks. So I'm not saying to screw around, but you have an extra week in this cycle. If you want to technically start your cycle here on the 21st, this would be week 1, and you'd finish out here on 12. So doable. All right, so there's plenty of time left to get this quarter under control, rolling into October. All right, that's it. 3 months, starting a little late. You got 12 weeks for the cycle. You brand new people, Saray, there's a spreadsheet that will help you grade yourself for homework or your trading. And it's in the forum somewhere, and if not, I'll find it and dig it up. See if you can come across it or ask in the chat. Somebody might have it. It's a score sheet for using the 12-week year principles. You understand that the 12-week year book is based on sales. So we took that and we adapted it to be used for trading, the kind of stuff you should be doing and how you should be dividing up your quarter to be very aggressive about making it to the next level. And there's a spreadsheet, how to grade your homework, how to grade your trading, all that stuff. And that's available in the forum somewhere. We'll get it to you if you need it. All right. This is the book, 12-week year. Brand new guys, grab this thing up. We only do books and audio in this group. All right, so usually I offer some supplemental reading because the guys have been around a while. They're sick of hearing about this 12-week year stuff. Hey, Cal, I see you, brother. Welcome in, man. All right, so the next book is actually a military book. I love this guy, man. This was one of the better books I've read in a while or listened to in a while. I say read and audio. My wife says it doesn't count. I really don't know if listening to it's the same as reading it, but for in this group, you got to do audio. So anyway, this guy is amazing. All right, he's like the only guy certified in like special ops in like 3 different branches of the military. He's done these like super marathons where they run like 100 miles. You listen to the story, it's crazy. He came up really hard, man. You know, I think I had it bad growing up, and it's a joke compared to what this guy went through. So I think you'll enjoy the book, but I got to give you a caveat. And here's the thing. The guy talks worse than me, all right? He has a bad mouth, and he uses that mouth in the book. So if this offends you, don't find another book, man. Don't listen to it. But here's the deal. The message is really good. And he talks about pushing himself beyond what everyone thinks you're capable of as a human. And I found it really compelling. I'm using some of his things in my exercise, and it's actually working. So I thought it was good, man. So if you can overlook some bad language, you might find it worth it. You know, if you're like from New York, this is like stuff you hear on the street every day. But if you're not from New York, and the book might offend you, he uses a lot of F words in there. And I just wanted to give you a warning. If I don't want you to come back at me and say, man, that book was good, but I hated that guy's mouth. Okay, if you know that going in, don't buy the book, all right? But there's some good points in there. All right, real quick, for the group, I prefer everyone to use audiobooks only. Listening to a book gives you the key points more efficiently and allows you to multitask. If you're doing exercise, if you're running, whatever it is, in the car driving to and from work, you can listen to a book much faster, more efficient. You can read it. The other thing that's really cool is on your audio player in almost every single cell phone, you have the ability to speed the book up to 1.25, 1.3, 1.5. So you can listen to the book in a fraction of the time that it would normally take because you could speed it up, and you can't read that fast, man, unless you're like a really good speed reader. The whole purpose behind doing this is if I mention a point on like the book and the audio chapters and the book chapters don't align, but if we're all doing the audio, then our chapters will align and our points will align. So if I tell you chapter 3, section 2, 5 minutes in, you'll know exactly where to go. All right, so I'd rather see you spend more time reading charts than reading a book about some dude in the military, all right? But anyway, that's where we're at with this stuff. The quote, I haven't found the new one for this quarter. I'll dig one up unless someone's got one. Never allow waiting to become a habit. Live your dreams and take risks. Life is happening right now. How many times have you said, I'll start in August, I'll start on the 1st, I'll start at the beginning of next quarter, I'll start on Monday on the 1st. Whatever your bullshit excuse is, put it aside and just get to work, man. This is exactly what that quote talks about. Don't let pushing something off become the habit of the day. Just be better. All right, so I got an email question. And you know I get these a lot. This is like a twofer for me because I can answer it here and I turn it into some educational content and I don't have to answer this person back. All right, so can you explain why 6B or GU wasn't long last night? And this was, I think, Monday going into Tuesday. If you guys aren't familiar, pull the chart up. I'll show you some snapshots. Okay, so when you're checking down any instrument in this group, we all look at the 1 hour chart for directional bias. You could look at the 4 hour and the daily for some other key points and swing points on the chart, but the 1 hour is how we measure and take direction. All right, so look at the 1 hour chart. look for a trap high or low in and around the blue tracer from the previous session, previous day. The areas of interest, right, we call our waypoints. What would they be? Swing points, consolidation zones, trap areas, VWAP type stuff, points of control, things we've been talking about. You new guys are going to be lost, but just hang in there with me. This is from the book mapping stuff that we've been talking about in volume over the last 4 or 5 weeks. All right, swing points, block zones, those areas, right? You draw like a box top trade, bottom box, box top, 21s, 12s, even 13s. Those type of trades where you get a single spike to the high and then a 3 top 4 or 5 days later. Those are the things that would be of interest to you on the 1 hour chart. And those would help you get a directional bias. The pointing of the moving averages on the higher time frame, the crossovers, the alerts. Okay, so once you have an area of interest and an idea where you want to take a trade, then you drop down to the 15-5 or 1 minute chart and grab the entry. Okay, that's how we do it. That's the bellwether. So in this particular chart, this person was looking to go long right in here. Right, so we can extrapolate that this is what they were anticipating. And that looks like a pretty decent bottom. I could understand saying maybe 1, 2, and 3 into the last push, a W, and then higher prices. Okay, so that's what they saw, and they thought it should have been long side. So now if you drill out, this is the 5 minute chart, by the way. If you drill out and start looking what was had, this was right here at this point. So automatically, this is a 21, 2 legs, single leg. That's the single leg trade, right? And this is that failed to return in the book. It came into this volume that was pending here, rejected, and on the second time through it held again. That's book mapping stuff. Price broke down coming out of Asia. Gave you this rejection right here, and that was it. Price was sell side all night going into the U.S. session. Okay, and if that wasn't enough for you, you had this little piece right here, right, which is a 13. Right, a single leg high back on July, I don't know, right before the holiday, July 5th, July 6th. And then it worked its way down and came right back up, and this area held again, strong. Listen, I'm sorry if I sound raspy, man. I wasn't going to say anything, but I've been sick for like the last couple weeks. That's why I'm behind on my emails. I'm really sorry. I apologize. So I'm a little raspy tonight. I hear it when I'm talking, and I apologize to you guys if it sounds bad. But I'm getting better. I'm on the mend. Things are looking up for me. So don't sweat it. All right. So if you mark this out over here, you would stretch the box out, right? You're going to take, on your box drawing, you're going to take the top of the red candle, and you're going to take the wick and full body of this, right, up to this point. This would be your box that you would extend out. You're going to extend this box out into the future, and it's going to miss these pins and these rejections. So what you would do is once this first rejection hits, if you took this M formation and got that trade, then what you want to do is you're going to draw an aggregate, these body tops, these high swings, and refine the entry off of here. So now you're looking for sell side rejections off of this level in the market, and that's it. This railroad track coming out of the 1 hour, you would count this green up and these 2 red down. That's a railroad track on another time frame, right? If you look at this on 4 hours, it's a couple hours up and a couple hours down. That would give you, depending on where the cutoff is on the 4 hour bar, but you would have 1, 2, 3, 4 up, 1, 2, 3, 4 down. That would be a solid railroad track on a 4 hour chart. A pin rejection, an evening star, is a different pattern on a 4 hour, a higher, a daily, depending on what you're looking at. So if you see something on a 1 hour chart that looks like a green vector to the high and then 2 breaks to the low, that's railroad tracks. They're just broken because time expired. The rejection is irrelevant. Let me erase this stuff. the time expired on this candle before it had a chance to complete, but it's still 2 down candles, right? And the third candle takes out the entire levels. You see that? Okay, so this is railroad tracks essentially. Railroad tracks are a reversal pattern into these levels, gives you the perfect setup, sell side only. Okay, yes, it's a fractal market. I thought you were going to bed, man. What happened? You decided to hang with me? I'm kidding. Don't leave, man. All right. So that's why this setup, right, as good as it looked as a W formation, was not valid. And not to mention too, you get the problem is here, you got to close above the ketchup. There's one more bar right here I didn't get. But then it rejects off of here and heads back down. So on a 5-minute, it absolutely looks like a sell, and you could draw the box on here and you could say, man, it retapped in there, didn't take out the low, broke above the quarter wood. All those things. All right, baby. Thanks for staying up. What time is it in Portugal? All right, too slow to type. I'm trying to see. All right, I was going to draw on this for you, but we don't need to draw. Okay, next stuff. Okay, so look, it's a new quarter. I always bring this shit up. You people get mad at me, but here's the deal. You got to make some plans. You got to set up a structure with some rules, and you got to execute that stuff. So first part of the quarter, I always revisit this stuff. 12-week year, get some stuff mapped out. How are you going to succeed in the business, right? These are the considerations I need you to think about when you send me something. All right? So, okay, Steve, I'm mapping out my 12-week year. What do I need to think about? I want to know how you're going to use your time on a daily basis. If you're unemployed right now and you're focusing on your trading completely, it's probably not that big of a concern for you. But if you're trying to balance your day between your job and your night hours and trying to make this all come together, you need to manage this. There's some guys in here that manage it flawlessly. My boyfriend, I don't know if he's going to get mad. I always mention him, Vinesh. He has a full-time job. He has a really prestigious job in the pharmacy industry. His family supports him, and he manages to take a nap, get up, trade, go back to bed, go to work for 8-10 hours, and then do it again. That's a tough schedule, man, and I have a lot of respect for him doing that. So you have to understand, how are you going to allot your time? How much time are you going to allow? Of the time you have available, how much are you going to allow? 1 hour a day, 4 hours a day? Are you going to attend the DMRs like manual, or are you going to go to sleep? Are you going to watch the recording? I have no problem with you watching the recording because you have the same thing you could do with an audiobook. You can cut out all my bullshit where I talk about the book and the stuff you already heard, and you can move right up to a part of it where you could say, okay, this is the stuff that I need from Steve today. I'd rather you listen to the whole thing, and if you speed me up, I guarantee you won't understand me. I'm talk too fast. I'm from New York, man. So if you speed up my recording to 1.5, you won't understand a word I said. All right. This is the most important thing I'm going to lay out for you. Is your partner or significant other or your family on board with you doing this? I know a lot of people that have got themselves, I guess, in a bad situation with their spouse, their significant other, and it causes problems, man. If you're working a 40-hour-a-week job, it's not 40 hours. It's 40 hours at the company. It's an hour a day to get ready, and if you're a lady, 2 hours a day to get ready if you got to do all that stuff before you go. It's an hour to get home. You got to make dinner. It's an 8-hour workday is 10 to 11 hours. That's where I come from. That's how it's done, and I'm pretty sure it's standard. So your time is very limited. You got to get home and get some sleep, or you got to show up and listen to me for an hour. I understand how tough it is. So you need to make sure that you're in a situation in a relationship where you could weather the storm together. And if your person is aware of what you're trying to do and the reasons behind it and understands the business, it makes it easier, man. So you guys know I'm once divorced and from this business. But anyway, one of the reasons anyway. But anyway, you got to make sure your person's with you on this. So talk to them. That's the biggest thing. Sit down and go, hey, man, I want to be a trader. I hate my job. I really want more for us. Is it okay if I, for the next 6 to 12 months, go all in on this? And you young guys, this is a waste of time. If you're like single and you're 20 years old and you live with your parents, you got it made. Just make this happen before you move out, man. All right. Homework. How are you going to do it? Are you going to do the drills, the high-low drill, the TDI, the projections, chart markups? You're going to do the algo loop. Decide how you're going to set yourself up. Are you going to trade demo or real? Okay, if you're going to trade demo, I'm fine with that. But for how long are you going to trade demo? You're going to be a forever demo person? That's bullshit. I'd rather see you trade a small real account than trade demo indefinitely. You need to get a hold of real money and get all the emotions associated with that. Doesn't have to be a lot. If you make $1,000 a month, then $1,000 you'll feel. If you make $500,000 a year and you trade $1,000, you're going to be like gambling. You ain't going to give a shit. It needs to be something that won't break you financially, but has value in your mind or in your situation. It has to be something that you'll feel if you blow it off or lose it, that it matters to you. And you got to pick that number. It's different for every person in this room. Okay, so what's your main setup going to be? What's your bread and butter trade? Are you going to do zone flips? Are you going to do 50 bounce trades? You have to pick the instructor that you want to follow tightly and focus in on that setup and become a master at it. There's quite a few people in the group that qualified for FTMO using just 50-50 bounce trades. Okay, there's a recording of that in the forum for you new guys if you want to hear it. It's my boyfriend. I don't know if he's here tonight. But anyway, you got to figure out how you're going to allocate yourself. What pairs, what trading time, what office hours, your hard set rules, your IFTT, right? That stands for if this, then that. If the dealer cuts the high and pulls back, what's your move? If the dealer extends the high again and I'm short, what's your move? If they show you something, what is your reaction to that? It's if this, then that. They use it in computer programming, but I've applied it here for trading because it's relevant. If the dealer shows you a certain thing, you have to react to that. So if he does this, then you do that. When I move, you move type stuff. All right, are you going to qualify for funds in the group? Is that something you want to do? Trade management. Are you going to be 1/3 position, take some out at 10, take some out at a fixed number, and then trail the rest? Are you all in, all out? Are you going to remove the risk on the backside by adjusting in the negative space? I talked about that about a week ago, 2 weeks ago. Are you going to do the 30 trade assessment and send it to me? Or are you going to go right into the FTMO challenge and send me those numbers? What's your money management strategy going to be? Are you going to be a 3-bet 50? Are you going to be a weekly change on your lot size? Are you going to be fractional money management, continually compounding after every trade? Okay, and this is important too. How are you going to structure your sleep, your health, your mental clarity, your family? How are you going to balance all these components? It's all part of the business and needs to be part of your decision. Okay, you're going to put your wife to bed at 11 o'clock at night and then get up and trade from 11 to 6 a.m.? Is she going to hang with you? You got to figure that stuff out. It's important. Okay, structure. You need structure in a structureless business. Why? There's no rules, man. You have to govern yourself, especially you new guys. Calvin, you listening, man? You have to govern yourself. You got to be responsible for yourself. Military persons have an advantage here. I was in a paramilitary organization for a long time, and you guys are probably sick of hearing this shit, but protocols, SOPs, there was the yellow pages. You young guys don't know what that is, but a book the size of the yellow pages of rules and shit you had to do. But here's the thing. When I transitioned from trading, coming over, I was used to rules. So it made sense to me that you have to have some type of framework and how to behave when you're executing trades and how you manage trades. So it made sense to apply some disciplines and use the same disciplines from the organization I was in. Pilots transition very well, engineers, people that are very technical and understand rules-based or following a blueprint or some type of format, which would be an SOP or a protocol. Here's the deal, man. The brokers will gladly take your money as many times as you can afford to refill it. They don't care. You think they're worried if you got rules-based trading and if you're doing okay? As long as you feed the machine, man, they don't care. There's a lot of intangible things connected to the trading business that directly affect your ability to earn money and pull a paycheck. And I just listed probably half of them. There's more. But everyone has different considerations. It's not enough to fund an account and start trading, man. It's just not good enough. You're not going to pull. You have to have a setup, money management, hours, right? You can't study a pair in London and then trade it in the US session. The behaviors are absolutely different. You have to have a set, regimented time you're going to be in front of the screen, office hours, whatever you want to call it. But you got to work through that stuff. All right, here's an example. Office hours. I trade from 1 a.m. to 7 a.m. New York time. I trade EU, GU, ES, gold, and sometimes look at crude oil. My main focus is on GU, which in the futures contract, it's 6B. I'm looking for zone flips off an anchored base, off of the bookmap stuff I've been talking about. Looking for a point of control VWAP, and I like to take the first iteration of that in and out. Coming out of level 1, pull back into the apex nadir. Looking for a secondary M or W pattern. You guys are lost. It's in my recordings last couple weeks. You got flashcard examples, memorizing the variations on the theme. Second leg higher, second leg lower, type 1, type 2, type 3, that stuff. What does it look like? I'm all in, all out, break even as soon as 10 pips is seen. If I grab the second iteration perfectly, right? Here's your M formation. Here's your apex nadir. The book flips below and gives you this. If I grab that entry right there, it moves profit immediately and never comes back. That's where the book flips and they retest into the stripes in the book. And if you don't know what I'm talking about, go back and watch the book mapping stuff. All right, first target is the impulse leg, which is this piece right here, about 30 pips, and depends on the pair. Crude oil and ES in the US session pays out more. Crude oil issued out 210 ticks today, or pips. Give you an idea of the impulse legs. Money management spreadsheet, strictly adhered to, compounding. No trades executed during the London US gap. So if London's here, you have this gap time here, and then the US session starts. Not going to put anything on the books here. This is the 9:30 cash open. It goes crazy, man. You want to let it settle down. They call that the opening drive in the US session, in the stock market. It's all the same crap. Right? I like the trades to be in the shadow or just inside session. So this is just inside the box is ideal. Same thing here. You have your shadow box, and just inside this box, first couple of bars, because you might get the Brinks trade setup where the higher low is in the box, and then you get that pullback right here, just in session. That gives me the entire rest of the session to get the move that I'm looking for. Okay, hope that makes sense. All right, execution. Okay, if you're looking at so many pairs and you know that you're going to get typically one session a day, what are you looking at? How many setups appear in a typical week during your available office hours? Okay, one per session, that's 5. If you're trading 5 days a week, if you're trading 4 days a week, it's 4. If you trade 4 pairs and there's 5 setups, you have 20 possible entries. How are you going to handle all the entries? What's going to be the filter? Okay, Steve, I got 6C and 6B setting up exactly the same. What's the difference? Well, there was just a 1 hour crossover on the moving averages on GBP, but Euro did it yesterday. Okay, fresh cross, tap back into the average. I like that better. So that's the filter. What's your filter going to be? Are you going to look at the higher time frame, proximity to the higher low? How much ADR is left? Are you going to use a harmonic as a filter? You got to know this stuff, man. Okay? If this, then that. If 2 trades present at the same time, will I take both and cut my risk? If you're a 10-lot trader Will you put 10 and 10? Or you put 5 lots on one and 5 lots on the other? Since they're correlated, they have a tendency to move the same. So if they both stop out, you'll lose 20 lots at your designated stop versus losing 10, 5 and 5. You got to work these numbers out. Okay, if one trade moves to break even, or if a trade moves to break even, you're good for target. You're going to go in again, take another opportunity, or are you done for the day? This is stuff you got to work out. If you take one and you're at break even, another one sets up, then you know the risk is off the table, so the same percentage is on. If you're trading 2% risk and you're at break even, then your risk is 0. So now you can take 2% again and only be exposed by 2%. This is off the table now. These are the things you got to hash out. And this is, man, I'm only scratching the surface. There's a lot to it. It's all the stuff you got to work out. All right, so what I want from you, this is your homework. Calvin, Saray, my new guys, some of you old guys that are lazy. All right, I'm just kidding, man. Give me something that hashes out these questions, challenges that you might see in the business of getting it off the ground. I'm sorry if my voice sounds bad. Hold on. Let me drink some. Okay, so write the stuff out, write it down, hash it around for a couple days, think about it, make some adjustments, and then send it to me. All right, and I'll take a look at it. I promise you I'm going to get caught up. I'll take a look at it. You'll see where you're at. But you got to write all these things that we're talking about for consideration. It's if you work these things out ahead of time, the challenges with family, your hours, your sleep, if you work this stuff out, it's going to make it a lot easier for you to get through it. I promise you. Instead of just winging it, you got to have an idea what you're doing. Okay, so the next step, first part of the quarter, you're going to map out available pips. I'll do that in more detail next week. So, how do you build a living in the business? You're starting out, you're having some success, you got your rules hashed out, you got your trade figured out. The old school of thought was to borrow money from a credit card. That's what I did. You can use a HELOC, which is a home equity line of credit, or you hit your family up, man. Not everybody has rich uncles laying around. I banged a credit card. And the idea was you couldn't raise a lot of money doing that. So we're just kids, we're growing up, didn't have a lot of cash. So what happened was you had to overtrade, over leverage, and be very aggressive. It causes a lot of stress because you take one hit, it's painful. But here's the thing. Today, now, in this economy and in this trading environment, there's a unique opportunity to put your skills to the test and qualify for funds. The beauty of this is that it can be treated like a demo account. You can treat it like it's not real because it is and it isn't. It's not your money. You're not responsible for the risk, and you do not have to pay it back if you burn it. Most traders in here should be able to pass a challenge if they follow our methodology and use a rule-based approach. And it's happening, man. A lot of people are getting qualified. I'm so happy and excited for everybody. Just to be clear, I'm not affiliated with FTMO. I do not give links. Someone asked me for a link the other day. I do not do that. Never, ever try to sell you guys anything outside of this class, period. Just don't do business like that. The reason why is that I don't want to steer you to a broker or steer you to something, and those people turn out to be, I won't curse, not nice people. I don't want to be responsible for that, and I don't want to have that on my conscience. Okay? So that's why I don't do stuff like that. I don't need it, but there are people in the group that are doing this and having success and getting paid. Okay? So the question was asked to me, Steve, I want to leave my job. I earn about $60,000 a year. Can you show me what to do? And the answer is, of course. That's why you hired me. All right, considerations, right? Do you currently have health insurance provided by your employer? You don't have to answer me. I know you're in here. Do you currently have a cushion savings account of 6 to 12 months salary set aside for emergency? Okay, look, doesn't have to be drawdown in the business emergency. You could get sick, man. You get sick out of the blue. This COVID shit's going around. It's a crippler, man. It's really hurting people. What if life's going along great and you're killing it, and all of a sudden you go out, go grocery shop, and you get sick? Then what? You can't work. You can't sit in front of a screen. You can't breathe. What do? You got to have a cushion set aside. And the other question is, do you currently have debt? Credit card debt, whatever kind of debt do you have? You got to take these into consideration when you're getting ready to make the transition. All right. The last thing you want to do is leave your employment and place yourself under tremendous pressure to earn. You're setting yourself up for failure. It's very difficult to not have any of these previous things I mentioned, having money set aside, having an emergency fund, having your debt under control, and all of a sudden you hop out and you go, I could do this shit, I'm doing it, and then you start having problems. Because you don't have any leeway. You have to earn. You're better off staying at your work and getting through it. So one of our fellow students was kind enough to give me the numbers for review. And I want to thank you for that. I'm not mentioning your name. It's nobody's business. Okay, so this is the numbers. They're respectable. Fantastic. You qualify for the level. So this is some of the information on FTMO Challenge. Okay, this person's trying to qualify for a $200,000 account. You have to make a profit target of $10,000. Your max loss is 20 grand. Your max daily loss is 10 grand. So obviously you want to stay under that number. This person passed on all points. You have to trade 5 days minimum. That's very doable. Okay, so let's look at some of these numbers. Number of trades, 16. 81% win rate. Not bad. 4.15 profit factor. That means for every dollar traded, $4.15 was returned. Excellent. The only number I'm not mad, that we need to work on is this, and I'm going to talk about how to do that. But if you take 16 trades times 81.25%, that means that 13 out of 16 were hit. Okay, so that gives me some numbers to work with. Now I know where we're at. Okay, so if this person earns $10,000 a month, at 12 months, that's $120,000 a year. FTMO gives you 70% payout. So 120,000 times 70% gives you $84,000. If you're earning $84,000, your effective tax rate is about 17%. Depends on if you're married, filing jointly, single, head of household, all that bullshit. Doesn't matter. So after $84,000 of earnings, with your effective tax rates, you're going to earn about $69,720. Out of that $69,720, if your employer's paying your health insurance, you got to pick that up, and it's not inexpensive. Okay, I can't remember. I think it was like, I don't have this policy anymore, but it was Blue Cross Blue Shield, and it used to be about $12,000 or $15,000 a year in premium, and then a $17,000 deductible. I found better options, but I had that insurance for a couple of years, and it sucked. You're never, unless you get hospitalized or damn near murdered, you're never going to meet the $17,000 deductible. So basically, they ain't paying shit. This is the stuff you got to consider. Okay? So here we are. You want to replace your $60,000 a year salary. You're right there, man. This is right there. Just from those numbers, you're there. Now, before you leave your job, you need to earn more than your job in order to have the other elements that I talked about. So earning your current salary is not going to be enough to get you out of your situation. But the thing is, you're in an unlimited opportunity business, right? There's some options. You could either qualify for a higher amount in the challenge, or Work the account that you have to its full potential. That's way easier. You ready to qualify for the number? You got 200 grand in the bank, right? It's in there. You just got to work it. So looking at those numbers, right, that we looked in the beginning, there's two immediate adjustments that I can see right away that need to be done. And that's you got to get the profit ratio to 1 or greater. You're coming in at 0.96. That's okay. It's almost 1 for 1, but 1 for 1 would be better, obviously. So the money comes off the back side or the front side, right? If you're trading and you're in a position, you have your stop and your limit. How do you fix your profit factor? By adjusting this way and this way. Okay? We need to go back and look at the trades, and I don't have the actual strings or anything. So go back and look at the stop size and adjust it based on the probable outcome. What does that mean? Okay, if you got, let me erase the ink. If you took a trade, your zero entry, and your stop is some number here, out of those three lost trades and the other stop levels you were using, how many of those trades would have been stopped out if you shaved 5 pips off your stop? Did they all go right into profit, or did they meander around back here and then head over? That's the question. Were you on an impulse leg coming out of level 1 and the trade just took off? Then this becomes a fixed number that's adjustable to a lesser number. Out of the 3 that were stopped, if you had gotten stopped at, I don't know what your stop was. Let's say it was 20. If the stop was 15, would you have still gotten stopped? Right? And the answer is yes, but you would have saved 5 pips on 3 trades. That's 15 ticks, 15 pips. Now on the take profit side, go back and see how many trades went for greater gains than you actually took. Right? You were trading 1 for 1, but ended up with slightly less than 1 for 1. So I'm assuming, for argument's sake, that if you use a 20 pip stop, use a 20 pip limit. How many went for 25? How many went for 30 of those 16 trades that you took? Right? And out of the 16, it would have been 13 that you need to see where they went, because the 3 got stopped out. Was there significant draw back into your gains? So if you got in a trade going into level 2 and you got a nice push and it pulled back, was that enough to stop you out at break even? Or was there enough meat here to take a plus 30? So now if you extend this piece forward by 5 or 10 pips, and you shrink this piece in by 5 pips, you just got yourself to almost 2 to 1 or 1.5 to 1 risk to reward. Right? You got to go back and analyze those off the chart. And you're going to remember, because it wasn't a lot of trades and you had heavy money on the line. So you're going to remember exactly what happened when you took the trade. You can say, oh yeah, trade 2, I took this and it went straight to profit, man, and I got out 20, but then I watched it and damn it went to 40. Right? So you're going to know the answer to this stuff, and that's going to make the difference. All right? Adjust accordingly to start making this thing come together for you. The idea behind this concept is to be wrong for less and be right for more. I know it's easy to say because there's emotion involved. You're trading large lot sizes, and you want to qualify. I understand that. But you can't let the fear cloud your judgment. You have to get in there and execute just the way we've talked about for years together, and just the way me, Carr, and Jim have showed you how to execute. You just get in there and pull the trigger, man, and let it go. The idea is to control the risk on the downside. You do that by moving the stop in negative space. Right? This is the most overlooked thing, is moving the stop in the negative space, man. If you got a 15 pip, minus 15 pip stop, when some number is reached here, if plus 15 is reached, you can take the stop to 7. That cuts your risk from 2% down to 1%. Okay? If you're trading 1%, it cuts you down to 0.5% risk. Anybody can live with that. If it goes another X amount of pips, 20, or goes to plus 25, you need to be at break even. or you need to be at break even sooner? Okay, question is, it's a good question. What's a good risk to reward to start with? Because I'm looking to demo 0.5% and a 2-to-1. So after how many trades should I look to start taking more? Okay, 0.5%. If it's demo, don't take it that small, man. 1%. The spreadsheet doesn't even allow for a 0.5, and I'll talk about that in a minute. You're not working the capital property properly taking 0.5%. Take 1% risk. If you remember, I talked about risk of ruin. If you follow the spreadsheet, you got to really suck to blow your account. And I'm joking, man, but if you're going to have to blow, it takes over 100 trades to lose 100% of the money if you're scaling your risk at 1%. And if you're sticking to it. So I'll show you guys on the spreadsheet how that plays out, all right? So look, this stuff is good, but she did a fantastic job. You just have to shave some off the back, add some to the front, and get your ratio to 1 or greater. That's all I want to see, is I want to see you get this ratio at least to 1. But your ultimate goal should be at least 2R trading or better. And that's going to come. But if you could trade 2R right now, maybe do a 10 pip stop and a 20 pip take, or a 15 pip stop and a 30 pip take, some adjusted numbers. And I'm okay with 1.5 for right now. You're going to be okay with that because you're already okay with 1-to-1. Okay, so this is the stuff I want to ask you. What part of the cycle were the trades executed on? Maybe you can write me back and we can talk about it next week publicly if that's all right. Did you execute level 1 into a pullback? Were you using catch-up close as a trigger? What was the reasoning behind your stop placement? Was it fixed number? Was it technical? Were you using that arbitrary, I needed room for it to breathe? Right? That's a common thing that we do in here, but it's not technical, especially since we've added bookmap to the trading platforms and you understand what's going on in there. Since your lot sizes are larger than perhaps you're used to trading, was fractional money management implemented? If you take the same size trade every time, you're not working your capital correctly, period. You have to vary your lot sizes. Okay, so I did the numbers for you. Win rate 16 trades at 81%, 13 trades won, 3 trades lost. Okay, so let's say we took the same number of trades that she did and I mocked up a spreadsheet. Okay, so just to fill you in, I just used a 10 and 10, which is 1 for 1. And I could not, the spreadsheet doesn't even recognize 0.5% risk. The minimum is 1% risk. So in order to get a $200,000 account to trade as 0.5, I cut it in half to 100,000 and use 1% risk. Make sense? Simple math. Okay. So now, if you go back and look at the trades on the slide, it was about $1,000 loss and about $1,000 limit. Okay. She had 16 trades. These are blocks of 10. So 10, 1, 2, 3, 4, 5. This would have been her finishing number. Did I get that right? 1, 2, 3, 4, 5, 6. Sorry, this would have been her finishing number, 116. Okay, so she would have made $16,000 on the 200 using this 0.5% risk, 10 pip stop, 10 pip loss, and she traded the same numbers. I went in here, look, I took the 3 losses. I just randomized them, right? You had 3 losses roughly for around $1,000 and the take profits for around $1,000. Your account balance would have been $216,000 instead of $210, and you would have made a 60% more return on your money. Not a big deal. You qualified, that's fantastic, but when you start to take your paycheck, you want to qualify or earn as much as possible because you're getting 70% of your take. All right, so let's say we ramp it up. In order to reproduce your numbers, I had to apply 1% risk to a $100,000 account. The spreadsheet won't allow 0.5% risk. Let's look at numbers at 1-to-1 RVR because that's how you trade it. And also, the recommended minimum risk size should be used, right? Okay. $200,000 at 1% risk using a 2-to-1, 10 pip stop, 20 pip take. Okay, 1%, that's a very low risk. And I'm going to go over risk of ruin either next week or the week after. And I'm going to use these numbers to show risk of ruin, how difficult it is to get to that level. You got to really be bad, seriously. And I'm not talking about this person. I'm talking anyone in the group. You got to really be bad to blow your account if you stick to these rules. Okay, so 200,000 using 1%. Your amount of risk is $2,000, right? That means you can't dump. You have a $10,000 daily limit. You can't dump 5 trades. So 4 trades would be your max losses in a row. That's where the 30 trade assessment comes in. The other stuff I've been talking about. You got to know your math. You got to know, you know what? I've been trading 20 years. I never lose more than 2 trades in a row. Okay, that's good to know. If you never lose more than 2 trades in a row, then you're okay to trade 1% risk because you have 4 trades as a cushion. So that's 2 times your cushion to make you stay safe. Okay, now look at here, okay? A block of 10. 1, 2, 3, 4, 5, 6. The same account, just skewing the numbers a little bit, earned $69,000 using the full leverage of 1%, taking advantage of the fact that you have $200,000 at your disposal. This is what's doable, right? The other reason for not trading 1-to-1 is that if you lose 2 trades in a row, you have to make 5 trades correctly to get it back, or 3 trades correctly to get it back. I'm sorry. If you lose 2 trades, it's $2,000, right? You have to win 3 trades to be up net 1,000. You have to replace the 2 losses at $1,000 a piece. Then you have to hit another trade to be in profit for the day. That's a lot of unnecessary pressure on yourself. If you're trading 2-to-1 and you hit your first trade, you're up 2 times your loss. You can afford to take 1 loss and still be net positive for that small 2 trade cycle. Powerful stuff. Okay, so yes, you have to know the statistics and numbers of your trading plan. You have to. And it's different for every person. Look, if you've never traded big numbers, for them to say, here's 200 grand, good luck. That's hard. There's some mental anguish associated with that. I understand that. But the math is the math. Treat it like a demo and ignore it. Or before you take this challenge, practice on a $200,000 demo and use 1% risk and adjust the parameters. She's in now. She's going. It's got to happen now. But you guys can adjust your demo size when you decide if you're going to qualify for the 100, 200. I think it goes up to 400 or 500. You need to demo that and get a feel for the size number you're going to be pulling and what you're looking at. The spreadsheet does mini lots, and I don't know if this guy offers mini lots on that platform. If not, I'm going to show you how you handle this. It's important. Okay, let me erase the ink. Okay, you round to the near, just treat this as a decimal and just round it. Okay, 20 lots is 20, 20 lots, 20.8, 21 lots, 21 lots, 22 lots, 22 lots, 22.5, you can round up or down, stay with 22, 23, 23, 24. See it? Simple math. Just round these to the lot size. I don't know if he allows, some platforms allow a large number of minis, and that's what the spreadsheet was written from. You guys know the programmer that did that passed away. That Joe made this sheet for us based on the DDSM. That guy he's not around anymore either. But anyway, so there should be a full lot size web sheet or Excel spreadsheet to do that. I don't have it. It's probably out there somewhere, but I don't have it. So you got to employ fractional money management. When it's time to take a check, listen, you sat there, you took 16 trades, you stressed your shit out, you went through it, and you earned 10 grand. I'm not faulting that. That was the qualifying number. But in order to hit the success numbers that you really want to hit, you got to use the spreadsheet and you got to apply the minimum recommended amount of risk, which is 1%. The reason why 1% is the minimum amount of risk is because if you think about it, to lose 100% of your account, but if you're adjusting the lot sizes down as you lose, it's over 100 trades. And listen, if you drop 100 trades, then I failed you as a teacher because you're missing something key to being in this group. There is no way anyone in this group is going to drop 100 trades in a row. Can't let that happen, man. All right. I'm running out of time. I talk too much. My throat's killing me. Okay, so this was the difference in 2 to 1, by the way. I just wanted you to see the difference real quick. I think I did 2 to 1 already. All right, let me get moving. So the goal is to build your own trading equity and break away from the funding service. The funding service is great, but you can't rely on these guys. So this is what you have to do. When you start hitting your numbers and you're starting to take a check, you got to open 3 bank accounts and label them like your salary, an emergency, and your future trading account. Okay? So obviously you need to open and pay yourself. Okay? So if you're still working, you can put your salary money, maybe put more of that money. It's only going to take a few months. If you're making $10,000 a month and you're still working and you're going to net $7,000, in 6 or 7 months you're going to have 40, 50 grand. 7 times 7 is 49. So in 7 months you'll have $50,000 to yourself. Yes, please send me anything you want me to look at. Okay, I'm going to buzz through this stuff because I know it's 8 o'clock and obviously you can hear my voice. My throat's killing me, man. Okay, so if you keep your job going and you have 6, 7 months in a row of success, you're going to start padding your bank account. You're going to have a cushion built up for emergencies, right? How do you come up with an emergency number? Add up all your immediate needs, your debt service, house rent, food, electric, insurance, all that shit. Add it up. Times it by 6 or times it by 12. That's your number. What does it take for you to survive if things go bad? And it doesn't have to be, oh, trading went bad. That's not what I'm referring to. You have to be prepared for anything. Man, you can break your arm. A couple summers ago, I burned my retina. It sounds ridiculous, but I did it. I was looking at some sunset on the beach with my wife, and I burned my retina, man. I still have a little bit of floaters left in my eye, but I couldn't see. I went to a doctor and everything, the whole deal, the drops, a patch over my eye, all that crap. I didn't see that coming. I mean, if you lose your eyes, you're out of business. I haven't yet to see charts print out in Braille anywhere. You know what I mean? So you have to be prepared for anything that can happen. Anything. So you got to have, some of you guys have a pension from military, from other jobs. Man, that's fantastic. You have a cushion. The pressure should be off. But if you're trying to transition from a regular job to this job full time, you got to take these steps. Do not leave your job until you can sustain yourself for the desired period. If you say, all right, you know what, 6 months, I'm young, I'm healthy, if anything happens to me, I'll get back on my feet. Okay. Then you need your number to be your expenses times 6. And that needs to be in a separate account, not to be touched. That's your emergency fund, man. All right? The goal is to build your own trading equity and break away from the funding service. That's the bottom line. Okay? Now, you want to add to your trading account. So what you do is you either take the first couple deposits and put that into a separate account, and you can PAM it, right, which is percent allocation, and you can trade that account parallel to your funded account and grow it at the same time. So what will happen is if you're making a 10% return monthly, 20% return monthly, you'll make that same return on your own personal account. and then you'll start to get excited about getting away from these guys. Here's the reason why. You always have to be in control of your future and yourself. Never allow yourself to be devastated by the broker or any funding service or any bullshit. Okay, let me tell you why. Okay, you go to bed, you're minding your business, you wake up, the broker's out of business and your money's gone. It goes into receivership and you get some pennies on the dollar bullshit. If you think I'm crazy, look it up. It's happened to 3 or 4 brokers and me a couple of times personally. One time I barely got my money back and the place went under 2 days later. It's part of the business, man. You can't trust these guys. They're not regulated. Some of them are in Belize. Some are, and I don't mean any disrespect to anybody from those areas, but the U.S. has no jurisdiction and no reach to do anything about it. So when you open up, if you're in the States and you open an account in a foreign country, in an island nation, okay, don't be surprised one day if your money's gone. There was a guy in PFG, look it up. They actually made a criminal story about it on CNBC. The guy was faking everyone's numbers was demo, and he was taking the cash, living like a king, buying jets, flying all over the place, doing drugs. Typical stuff, right? It finally, one day, it caved in on him, and the whole thing went under. Everybody lost their money. Those things happen in this business. There's nothing you can do about it. But the only way to avoid that is if you had 50,000 in the account, make sure it's not your last 50. The only way to do that is to have money, spread it out, siphon off of these services, and build yourself rainy day fund and money to keep going. You can use the service for the rest of your life, but you better put money aside separate from these guys in case something happens one day. It could just happen. It's just the way it is. All right? Okay, so trying to wrap this up. I know I went long tonight. I'm sorry. Use fractional money management on any account. I don't care what it is. Try to trade a minimum of 1R. 0.96 is damn close. I'll give you the round up to 1. But try to be 2R or better and get past any fear that you might have of holding on to the trade longer. I'd love to see your analysis. If you want to send me, take those 13 trades, show me what happened, and show me the 3 that got stopped out. I'd love to see that. If you want to show me the strings on that, however you want to do it, send it to me, and if it's okay with you, we'll look at them next week. Set aside enough capital for you to be comfortable in a low pressure situation. That's the only way you're going to earn in the business. All right? This is going to give you the highest probability for success. No pressure, man. Stay working for 6 to 12 more months while you accumulate funds and prove out your model. If you trade this 200,000 according to that spreadsheet for 6 months to 12 months and you pull 70% of your earnings, I'll see you in the Bahamas at the Atlantis or at Baha Mar. We'll be hanging out on the lazy river together. I promise you, it's going to take care of your needs and you'll be able to do everything you need to do. You're not starting with 2,000 trying to ramp it up to 100, over leverage and over trade it. You're starting with 200,000, trying to make 10, 20% a month on that, and as high as 50% a month. It's doable. All right? Keep me posted. All right, don't forget to send me your homework. I'll see you guys next week. I enjoyed it. Any questions, email me. I promise I'll get caught up. I'm feeling better. Last few days, I'm coming around. I'm going to jump back in there and get it going. Good night, guys. Appreciate it.